Is bigness a good thing for an individual stock, or is it something that makes you start to reevaluate whether the stock can continue to move up?
Hey, Tyler. Hey, Kelly. I think the size of an individual name really matters. You have to understand why it got there. You know, this is not 2000, where a lot of those names got really large based off of expectations that never really panned out. This is a stock that, especially over the last 15 years, has just continued to kill it. And it's not only whether Apple is a good company or not, but it's also what are the other opportunities are in the market. And there's not too many stocks that put up the type of numbers, balance sheet strength, cash flow, and growth that Apple does. One interesting fact that I haven't actually heard anywhere, if you look at everyone's concerned about concentration in the market. If out of the 30 largest stock markets around the world, the S&P 500 is the least concentrated. If you look at the top 10 stocks, they account for about 31% of the index. If you look at Germany, those top 10 stocks account for 56%. Mexico, 75%. Czech Republic, top 10 stocks account for 99%. So we're ways off from any kind of that concentration risk that I think U.S. investors are concerned about. Look around the world, and I think that'll alleviate some of those concerns.
So let's turn a little bit, if we might, to what you expect for 2022. And in a nutshell, it's that the first half is going to be better than the second. Why?
Yeah, well, I think a lot of the concerns that investors ran into at the end of the year and still have today are largely going to be alleviated. Not that they're all going to go away, like COVID's not going to go away necessarily this year, but for all intents and purposes, investors will start to look well beyond this. We do think in the United States, COVID will effectively be over by the spring. Again, not going away, but not seeing the kind of issues we've had with supply chain and inflation. That's not true all over the world. China is still continuing to lock down, and that will be a risk in 2022. We do think things will eventually hit that part of the world regarding COVID. But I think, with the U.S. issues, we're already beginning to see inflationary pressures start to come down. Retailers have seen a huge surge in inventories. Demand is going to slow this year. We no longer have a crazy high savings rate for the U.S. consumer. And so we're further along in this market and economic recovery than we were a year and a half ago, when we saw all the vaccines come out or announced. So that was a really inflationary situation. This we think is actually more deflationary, or disinflationary, I should say. So we think the concerns around COVID, inflation, the Fed raising rates 3 times this year are all going to cool down in the first half, and that's what's going to keep stocks moving higher.